Hi, it's Larry Gaines, PowerCycleTrading.com. In this video, I'm going to show you a really cool earnings strategy. So this is on JP Morgan, and we're right coming into a new earnings season here with a lot of bank earnings this week, and then we'll have a lot of different earnings coming up. But this is one strategy that I like to use when you have a potential or a specific stock that doesn't have huge movements after an earnings release. A lot of the banks are like this, and here's an example for JP Morgan. So you can see that JP Morgan, these are the post-earnings moves that, over the last just number of earnings cycles, it doesn't have huge moves. So you can see the last earnings cycle back in October, it closed up on the week about 3.35%. Before that, it was pretty much flat, up a little bit over 4, 1.96 flat. So typically this doesn't have very explosive price movements. So with this type of, setup for potentially a flat kind of option or flat price movement, one strategy to use is what we call a calendar. So let me show you how that works. So if you think that price is not going to have a huge explosive move after an earnings release, such as JP Morgan, it was going out here at about 137, on the date of its earnings release. It was going to have the earnings release on the 14th before the market opened. So it was going out right here on the 13th. So we set up a strategy that would take advantage of kind of a flat or little market movement and take advantage of implied volatility collapse. So this is what we call a calendar. So this is a calendar spread, and it's similar to an iron butterfly where we're selling premium, we're selling volatility. So basically this setup was to sell the January 17 series. So this is for expiration tomorrow, this week of January 17, tomorrow Friday. So it was selling, the setup was before, the market closed there on the 13th, was selling the 137 call short, and buying the next week out the 24 series 137 call long, and that setup cost 28 cents. So that's the beauty of this spread, is that if you're wrong, you're going to only lose $28 per spread. There are so many other different option strategies you could do where you've got a lot more potential at risk. But this one then pays off really great if you kind of go out inside of this zone here, just like a iron butterfly. So you can see today it went out with a profit of per spread $37, okay, for one spread. So that's one spread. If you did 10, that's $370 on your risk of just 28 cents or $28. So that's a fantastic setup. So right now, that's going out today with 134% return on a very little capital at risk. Now tomorrow, if it's sitting right here, this will be up $45 and almost 200% return. So it's a really nice, sweet setup if you're looking for a strategy for very low risk, but a really good positive return on your capital at risk. And if you'd like to learn more about this type of strategy and iron butterflies and iron condors and things like that for earnings trades, join me Saturday. I'm going to be doing a live earnings workshop on a bunch of different earnings type trade setups for using weekly options and directional trades. So it's just going to be a fantastic workshop. So if you'd like to learn more about how to trade earnings and more about how to use the calendar or the double calendar, join me and use the link here on this email. Hope this helps. Talk to you on my next video.